proud and honored to be invited here by the EIB Institute to speak to you today. For what it's worth, I thought the quality of the presentations were excellent, and it's wonderful to see how kind of a rich social innovation landscape we have here in Europe. As I mentioned, my name is Pradeep. I am one of the founders of the Social Stock Exchange. It's based in London. They talked about this as a lecture. I'm not giving you a lecture. And if I do, whistle me and tell me to stop. I just wanted to, I think because we're all kind of entrepreneurs and we've all been on these journeys, I thought actually you might like to hear my journey, the journey that I took as an entrepreneur to try and launch this business, and this business is still evolving. And I think you'll hear war stories, you'll hear stories that you've heard before. But in the course of all of this discussion, the journey, hopefully you'll find out more about what the Social Stock Exchange is, what kind of companies are on it, and where we're going in the future. And we'll talk a little bit about impact investing if we get a chance towards the end, but I promise not to talk for more than 15 minutes. So actually, if it does come to 15 minutes, Louisa, maybe you can whistle or something and tell me to stop, and I'll try and do Q&A from there on in. Anyway, so I spent 3.5 years as new product development manager at the London Stock Exchange. And new product development manager is doing what a lot of you guys do. It's innovating. So I used to create products for the sell side, the buy side primarily, so investors, and the issuer community, so companies. So that was kind of one of the things I did there. And I built something called the Corporate Responsibility Exchange, which I'm not going to go into. But the reason why that's important is it got me interested in the whole area of socially responsible investing. Having said all that, when I started to look at what was inside all of these socially responsible funds and ethical funds and stewardship funds and all the rest of it, I saw the same companies all the time, Total, Vodafone. I mean, companies, okay, maybe they have building some sustainability into their supply chain, but what they're not doing, none of these funds are directing capital into high social or environmental impact businesses. And that was a real frustration for me. I couldn't stand it. And I was very fortunate when my friend, and who's also the co-founder of the Social Stock Exchange, Mark Campanale, came along to me one day and he said, Pradeep, I've got this strange research project. It's from the New Economics Foundation. I don't know if you know of the New Economics Foundation in the UK. It's a think tank looking at things like circular economy and resiliency and all the rest of it. Anyway, they wanted to look at how we might develop a social equity capital market. And I thought, well, what's a social equity capital market? But anyway, I thought, your job is to be innovative and do things at the London Stock Exchange. You better have a look at it. And in many ways, it's helpful for the New Economics Foundation researchers to knock on doors with London Stock Exchange letterhead rather than NEF letterhead. Effectively, what that research was looking at was why is it when social entrepreneurs and social businesses, once they reach a certain size and scale and they want to raise more expansion or growth capital, they don't go to the normal capital markets. So that was one question we wanted to try and figure out. And the other is, if you are a social impact investor, where do you go to find investable opportunities? And so that is actually kind of the gestation of the Social Stock Exchange. We weren't the first to come up with the idea. Clearly, other people had thought about what a social stock exchange might be considered to be. But it's the first time that anybody looked at it in any meaningful way. And of course, for the social entrepreneur, I mean, the clear problem is that there could be a tendency for mission drift to happen if you're on a public market and rapacious shareholders get hold of you and try and twist the social mission or the social vision of the company. And then again, for social investors, it was clear that there was no singular venue where they could go and invest their money in the hope of making both financial return, but clear social and environmental dividends. So what I wanted to try and do was improve this access to capital problem for social businesses, social entrepreneurs, and those who are actually using the power of the capital markets and capital to actually do some transformative things in our world today. You might ask why I'm so interested in the public markets. And I'm interested in public markets because of you. All of you can invest in publicly listed securities. What you can't invest in, unfortunately, is what most of the impact industry involves itself in, which is private equity. I mean, it'd be lovely to have that. Many of the people in the front row in the jury are actually social impact investors, but they do it with the private equity discipline. But all of you, through your pension funds, I mean, through your own personal accounts, if you have them, you can be impact investors. You can invest in businesses that have a publicly traded security. So that's kind of why I'm interested in this particular space rather than the private equity space, which I love. I mean, the whole social finance landscape is sort of broad and wide. And I'm trying to tackle the public markets side of things. So that's it. So just a little bit about my own kind of personal journey. I told you about the sort of beginnings at the London Stock Exchange. I left the London Stock Exchange in 2006. I was very lucky to get a consultancy arrangement with the UK government, the Office of the Third Sector, and they wanted to look at what it might be like to operationalize a social stock exchange. So I did a bit of work for them. Actually, it was under Ed Miliband, who is now leader of the opposition in the UK. But he left to go to the Department of Environment when ministers' pet projects, when they go, the pet project sort of dies usually. And so I was left with a lot of operational information about how I thought this might look. And then I just took it away and I said, okay, I've got some intellectual property here. I'm gonna write a business plan around it and see if I can find some money some seed capital to get this going. I did, in the summer of 2007, find a cornerstone investor for this. And then we got a kind of, you know, as an entrepreneur, you need to be a little bit lucky. So my colleague, as I said, Mark, he ended up at that first Bellagio conference. Rockefeller Foundation always goes to their retreat in Bellagio. And that's when actually the whole term impact investing was coined, at that particular Bellagio conference in 2007. And when Rockefeller found out what we were doing to actually create a genuine social stock exchange, a trading platform for high social or environmental impact businesses, they were really interested. And Rockefeller, I think to their good credit, were really visionary. They wanted to invest in infrastructure globally for the whole space that we're in. So they were our first seed investors in early 2008. But then just as I was getting going with everything, in late 2008, all of the capital markets collapsed and went into total decline, and it became very dire. And it became very, very hard for me to raise any further capital to launch the business. So there were, ironically, everyone was saying, Pradeep, what a great idea, social stock exchanges. In this financial crisis, this is the time we need one. But of course, they didn't have their checkbooks out, and no one was willing to give me any more money to actually get this off the ground. So there were kind of years of wilderness where I was doing some proof of concept work and market building and all the rest of it. In fact, our esteemed friend, Olivier Deguerre from Fitrust, who's one of the jury here, I went to him in 2009 and knocked on his door and begged for some money, and he said, oh, this is never going to work, this is never going to work. And then here we are, I'm meeting him a few years later, and he says, Pradeep, maybe I was wrong after all, this will work. So for those of you who are entrepreneurs, that's another lesson. Don't give up. I mean, there are people who are going to say, nah, that's never going to work, that idea's no good, etc. Perseverance is one of the things that, you know, defines an entrepreneur and an innovator. And you sometimes just have to keep going, even when it looks like there's no hope for you anymore. Anyway, so to cut a long story short, I did find three large-scale social impact investors, Panopore Trust, Joseph Rowntree Charitable Foundation, and Big Society Capital in the UK. All of them are investors in the social stock exchange. We raised the money in February 2012. But of course, we got lucky once, and then of course, disaster struck. During those wilderness years, I'd actually done a deal with one of our smaller stock exchanges in London to provide the trading platform, to provide the backbone, to provide the infrastructure for the social stock exchange. As soon as we got our money in February 2012, they put themselves up for sale. So they sold themselves to a company who was not interested in anything social, so forget it, you know. So then we kind of lost a bit of momentum there. I went back to my friends at the London Stock Exchange and said, can you help out? They weren't going to allow us to white label any of their infrastructure. So we had to do the classic, you know, entrepreneur's pivot. You had to move the model a little bit, try and do something different. So what they basically said, what London Stock Exchange said to us is, look, we love what you're doing. What we think you're doing for the capital markets is a good thing. We'll be supportive of you. But why don't you just be a platform that authenticates businesses as being high social or environmental impact businesses. Because we needed to do that anyway for our admissions rule to the segment of the platform that would be called social stock exchange. So we had a set of admissions processes, procedures, and rules on top of what you need to list on a stock exchange anyway. So we persisted with that model, and we were very fortunately kind of launched by our Prime Minister, David Cameron, at the G8 Social Impact Investment Summit in June of 2013. The social stock exchange is basically, at the moment, an opportunities venue. So if you're an impact investor, and by impact investor I mean an investor who wants to make both a financial return but a clear social or environmental dividend out of the product or service that the company is creating, this is where you would come to have a look at some of these venues, because they're investable. There's financial data there, and then because of our impact report, there is social environmental impact information. And our authentication model really goes around having an impact report that is a framework document. In our industry, in our sector, basically, I mean, there's, if you're in sustainable agriculture, your both your outputs, your impacts, and your measurements are going to be very different from if you're in health or something like that. So it's a framework document allowing companies to be able to provide the evidence of the social impact that they are creating, with a clear emphasis on beneficiaries. I mean, we're creating a world in which we want improved outcomes, and the only way we can measure the improved outcomes is wondering whether the beneficiary themselves is benefiting from the kind of work that you guys are doing. I kind of call this performance lock rather than mission lock. If you look at the recent work that has just been published from the G8 Social Investment Task Force, they're using, because we're always beset in our sector by definitional issues, and it drives me crazy myself. But I think if you can provide evidence of social performance, i.e. that there is a performance lock in your business, I think that's probably a way that our industry can move forward without sort of arguing all the time about definitional things. I'm not against mission lock, I have to say. I think it's a good thing. But for the position I take, looking at public companies, it's a little more difficult to embed mission lock in when they didn't start with it in the first place. I'm really proud because we've gone through a year's cycle, and part of our ongoing disclosure obligations of being a member of the Social Stock Exchange is that you must continue to update your impact report on a yearly basis. And all of our companies have done, which I'm delighted to know. We haven't got many companies, there's only 12 of them. We have, our newest member is an organization called Golden Lane Housing. Now, Golden Lane Housing is a trading arm subsidiary of a charity in the UK called MENCAP. And Golden Lane Housing does specialist housing for the disabled and for their carers. And what they have done is they've issued a very interesting bond. So it's a publicly traded security, it's a fixed income product. You can invest in it, it's publicly traded. And those are the kind of things that we want to try and provide greater oxygen of capital to in order to address some of our more intractable issues. I thought it might be useful actually if I just talked about some of the companies and organizations that are on the Social Stock Exchange. I won't go into great detail about all of them. Some of them, I think, deliver more social impact or more environmental impact than others, and you can look at that and see that in the impact report. Access Technologies, they do sustainable wood products. They have an acetylization process. They use sustainable wood, and it's an incredibly long-lasting, hard-wearing, and apparently beloved by architects all over the place. So that's what they do, and that's their kind of environmental impact. Ashley House PLC, again, it's a publicly traded company. Again, they do social housing, so their impact really is in care in the community and social housing. And they do it not just at a basic level, but they do it, they make interventions above and beyond what their statutory duties require them to do, and certainly above and beyond any of their competitors. Assura and Primary Healthcare Properties, two of the companies up there as well that are members of ours, They do specialist buildings for the medical profession. Their social impact is providing better clinical outcomes for the patients that come and see the doctors, nurses, and into the hospitals for which they design and deliver. Good Energy, as you might expect, is a renewable energy company that also sells that renewable energy company directly into the grid. So you can, if you're a Good Energy customer, you can assure yourself that 100% of your electricity that you're getting from them is coming from renewable sources. Some of the renewable sources they invest in themselves, some of them they partner with, and they just bring renewable energy into the grid. HaloSource is an interesting company in as much as they do water purification products. So water purification for homes and families, as well as at the village level, as well as actually water treatment in countries such as Brazil, India, East Africa, and so on and so forth. Again, these are public companies in the public markets and totally investable by anybody who actually wants to invest their money with both impact and financial return. ITM Power do hydrogen fuel cell technology, so hydrogen batteries for electric cars and such like. Places for People is another organization. Again, they are not a PLC, they're not a publicly listed company, but they have a social housing bond that is traded publicly, and again, totally investable. It's on the London Stock Exchange. Scope, again, Scope is a UK charity. They also listed a charity bond. Straight PLC is a plastics recycling company, but they recycle and they up-manufacture that recycled plastic into household goods and garden chairs and various other kind of household and garden products. Valerix is a primary R&D company for hard-to-treat cancers. So again, clear social outcome, but they are also, again, a publicly listed company. V22 is, I left it last because it happens to be just my personal favorite company of the ones we have, for no reason other reason than I like the arts. And what V22 is, I think, the only publicly listed arts collective. So Tara Kranzik, the CEO, what she does is she finds old disused warehouses in parts of London that actually need some regeneration anyway. So it's a bit of a regeneration play. She leases out these huge, big, cavernous spaces to artists who need to do their, sculpting and all, whatever they do. So it's a property play. And she also does educational outreach to students in the local communities who want to come and learn about, painting and sculpting and all the rest of it. But interestingly, they use a corporate paper, so they use the shares in the company to invest in part of the art that's being created. So if your artist suddenly strikes it big, as the next Tracy Emin or something like that, actually the net asset value of the company itself goes up as part of the model. So it's quite an interesting way of kind of using spaces and art and community benefit, and actually then creating, and if you consider art, community benefit art to be a social or cultural good, again, everyone has different flavors about these things, but I just think it's some really innovative models that you can see coming out by using capital markets reasonably effectively. We had bad luck a few years ago. We got good luck again this year, actually. So the old guys who Plus Markets got sold to, didn't want to know about us anymore, they've actually come back to us. They have a new CEO and said, actually, that thing that we were trying to do 2 or 3 years ago, 4 years ago, we actually like it now, and we want to resurrect that. So we were able to announce in September of this year that, in fact, we are going to be a fully fledged trading exchange, a trading platform, regulated by the Financial Conduct Authority. So our UK regulator can be, for companies that are UK, European, global, they can list on the social stock exchange. So it's a bit of a kind of a back to the future type of model. And the way we're doing this is we actually do want to fulfill the original vision of the social stock exchange to help companies raise capital at all stages of the corporate life cycle, right from early stage, seed capital, startup, all the way through to mezzanine A rounds, B rounds, and actually, hopefully, to IPO and float on the social stock exchange. So we will deliver on our promise to create a regulated trading platform both for primary and secondary issuance. But we're also going to create a middle tier, a private placement platform. Because as I said, much of what happens in the impact investing industry is really private equity. But even there, we're creating a platform for which restricted shareholders and restricted investors can come and find investable opportunities. At the lowest layer, the early stages of capital formation, we want to create a social equity crowdfunding facility. So one of the things we're doing differently, I mean, there are other equity crowdfunding platforms out there. One of the things we're doing differently is to create a secondary market on the back end of it. One of the hypotheses that I have about what inhibits crowdfunders to come into, especially equity crowdfunding ventures, is the fact that it is totally illiquid. You cannot trade or sell your stock or your share, whatever you have. But if we do create a secondary market, we might have a modicum of ability to exit from your stock position, and I'm hoping that'll provide some additional boost of capital coming in. We also are going to look at something kind of interesting, because I think crowdfunding is so locally based. We want to open the crowdfunding ventures for at least the first 30 days only to local people from where that particular venture is based before opening it out to the rest of the UK or to Europe. And as we kind of move into Europe, I think we'll use that much more of a bit of a regionalization model to sort of think about, crowdfunding is powerful because the crowd is, at you, around you, in your home, in your community, and I think actually hopefully we'll get more capital into local social ventures because of using that kind of a model. Am I running out of time? Yeah. I am. Oh, sorry. Okay.
It's attempting not to take over the whistle.
Oh, you could have whistled me. That's all right. I don't mind. Okay, so I was going to talk a bit about Spectrum Capital, but I won't. Should we just go to Q&A? I just wanted to say.
Q&A, because I think some of the things that you're going to talk about would be.
Okay. Okay, so let's do that. I'll sort of end it there, and
brilliant.
You can.
Yeah, and we just have a couple of questions because I'm sure you all want to know actually who won. And so, why don't we take a few?
Sure,
Firstly, though, we should just say thank you to Pradeep for telling us a little bit about this incredibly innovative and different way of working, and maybe there'll be social stock exchanges all over the world soon.
Absolutely, and I hope some of these ventures grow to a size in which they appear on the social stock exchange.
Yours,
exactly,
right.
exactly.
But for now, has anyone got any questions, comments, thoughts?
There's a gentleman at the back.
About?
There's two. Why don't you go first, then don't. Okay, so the question was, how do we measure risk factors for both social investors, but also how do we, I suppose, screen for social mission? The process for the social stock exchanges, we ask the companies to prepare, as I said, this impact report, but they must do it with a registered third party. So we keep a register of expert organizations. They include the big four accountancy firms, but they also use sector specialists who kind of know about social impact. And the impact report is prepared with the company and the expert, and then that independent report goes in front of our independent admissions panel, so that hopefully, and again, as I said, we ask them to do it on an annual basis, so you can see how impact is being created and persists over time. So that answers the impact question. The risk for investors, investors' risk is manifold. I mean, there's always financial risk. I mean, the company could post poor results or go bust or something. So the risk is no different than what it is in the normal capital markets, but at least investors now can look at a third dimension of risk, which is impact. And I think that is a difference, because we usually just look at risk in a two-dimensional framework, and at least now we're moving towards, I'm not saying this is 100% perfect or pure, but at least we're moving towards a framework in which we can have a third axis. So you had a question? Oh, same, okay. No, so we don't have as I said, we have a framework of these are the kind of things It's about your stakeholders, your beneficiaries, outcomes, metrics that you're going to use, and commitment from the board level as well. I mean, they have to have a social vision or a social statement, that the board can sign off on. Almost everybody in our industry uses a taxonomy called IRIS, I-R-I-S, as a sort of basic framework from which you build up these metrics. And so long as you're using that as the syntax through which you describe impact, I'm a little less worried about, who's got the right kind of format,
How much was invested until now in these 12 companies?
Some of them are quite small caps. So V22 is only, I think, 1.5 million market cap. Primary Healthcare Properties is the largest, and that is about 430 million. So that's pretty big. Good. Thank you very much for listening.
Thank you.